be here. Thank you for all joining this panel today. I actually just came back from London. I was yesterday in London on a digital assets forum, and I have to say this crowd here is much bigger and very nice to see that so many have come this year to our panel. We're going to dip into the asset management industry. I'm very happy that we have a broad panel. We have representatives of association, representatives of institutions, asset managers. And yeah, so I'm going to moderate this panel, and I think we should start with giving a small introduction. And please, not just introduce yourself and your association or your institution, please also give a little bit insight of what is your association, your members, or your institution thinking of asset management in relation to DLT and blockchain. So what is your nexus to it? How do you think about it? So I would say we start with Nisha, ladies first. Please, Nisha, start, and then we go around.
Thank you. A very good afternoon to everyone there. My apologies that I couldn't be there in person in Frankfurt today due to other conflicts, but I'm very happy and very excited to be on the panel. And my role in Citi is to lead our work on emerging solutions as applicable to digital assets and blockchain. Now, what this means is working on solutions which are very early stage, like pre-product market fit for the most part, and getting like the initial design of solution and taking them to the proof of concept and then to a pilot, hopefully basically taking things from 0 to 1. Working very actively on tokenization topics in partnership with our asset manager clients, but also exploring concept technology teams linked to identity, privacy, and all the related areas which need to come together with a viable proposition. So from pretty Citi's perspective, to answer your second question on where we see the fit, we work with a number of our institutional clients to enable distribution of traditional products like funds, between the the more easily accessible mutual fund and money market funds to the less accessible like private world. And we think that tokenization is going to represent the next stage in evolution of this asset class. The way ETFs were a wrapper and replaced a lot of capabilities, that they brought in a lot of capabilities in terms of a wrapper. I think like tokenization and smart contracts could be like the next step in evolution of the assets. And therefore, working very closely to build out what it means to add in tokenization. Is it like new distribution? Is it operational efficiencies? Is it enable new product capabilities? Is it too unfeasible, or a combination of these? Sort of jointly working with our asset manager clients to build out the proposition for them and for us. So very interested to hear from the fellow panelists topic. Back to you.
Thank you, Nisha. I will dip into that a little bit later, and I will ask you some questions. But getting over to you, Duncan. Duncan, can you please introduce yourself, your institution, and explain a little bit what you're doing in respect to blockchain, DLT, and asset management?
Absolutely. So thank you for having me. So I look after the digital asset strategy at Aberdeen. We're a global asset management firm. And our digital asset strategy is quite broad. So it's strategic investments in digital asset infrastructure, building crypto asset investment products to give our clients exposure to the growth and adoption of blockchain technology, and then also the use of DLT in the business. The main focus of which is tokenization. Tokenization of our existing mutual funds, tokenization of our clients' individual private assets, and also using DLT to improve or make operational efficiencies in the business. So fund operating models, the admin, the custody, the audit. We see great potential in reducing operational costs and friction in the fund operating model using blockchain.
Thank you, Duncan. So now I'm looking over to you, Frank, and I'm very excited to learn more about your members or what your association is thinking. I know what you're thinking and what you're doing, but the audience should also know it. So please go ahead.
Yes. So Frank, I'm managing director of the German Alternative Investment Association, and literally I'm trying to push our members and the industry on the blockchain. Being here today, being here also not the first time, it's quite interesting. There is, I think that there is still a huge gap between our industry. These are asset managers from the private debt, from infrastructure, private equity, hedge fund community. And they are not too far on the way on the blockchain yet. We push this topic now for 6-7 years and trying to help our members to understand why it is important to deal with blockchain topics. On the one side, the technological issue, because blockchain will change the value chain in the asset management industry. And on the other side, to educate also why are crypto assets a new asset class. And as Philipp Sandner also was here really partnering often with us, he did really presentations on webinars where he also tried to explain to the industry, but also institutional asset managers and investors, why it's necessary to deal with these new asset class, but also with the technology. And that's the way we push. And really, I say there's still some way to go.
Thank you, Frank. So, Martin, so go ahead.
Yeah. Hi, my name is Martin. I'm here on behalf of Able Labs. That's a company building the Avalanche client. And Avalanche is a network of networks. So it's not a single blockchain, as you may know it. It's more a network of different blockchains. And we work with many governments, financial institutions, all kinds of partners to enable their blockchain applications. And they may want to launch on our public permissionless chain, but many of them also may, for various reasons, regulatory, economical reasons, not want to launch on a public permissionless blockchain like Ethereum, but launch on more tailored, specialized blockchains that cater to their needs. And when it comes to asset issuance, what we think is, or what we hope for, is to enable more clients to issue more assets, especially assets that have a high trading volume and therefore need very low transaction fees, and also enable more of the whole value asset chain to bring it like on chain. So not only the asset issuance, where it's like kind of a digital twin of some asset that maybe still lives on some paper and then travels in parallel, but like full end-to-end asset issuance. And that would be very excited about to see.
Okay, that's great. I'm going to have some questions for you also in respect to the DLT pilot regime and what you think about that, because this is also an approach where we say we want to put everything end-to-end on a DLT. But going over to you, Malte, so what are you doing? What is UBS doing? And so what are you thinking about digital assets, or what do you think about blockchain when it comes to asset management?
Well, first of all, thank you very much for having me here today. Obviously an exciting topic. Just a little bit on my background, or first of all, maybe UBS. Important maybe to state, I'm representing UBS Asset Management, so one of the divisions of UBS being a large wealth manager, being active globally. Now, as an asset management firm, we basically are in the multi-asset space, so we have fixed income, equities, alternative assets, so the whole range of assets that we offer to clients. We typically ship them via funds, and that now, when we transfer this to DLT, also gives us an idea why we believe distributed ledger technology and digital assets are an important and interesting element for us as a business, because we believe, and we all heard it before, there is an element of efficiency and improvement of processes, which could potentially create some significant benefits for clients. Then secondly, we believe there will be a need or an opportunity, however you want to put it, to invest into digital assets as they basically become available. And I guess that's one of the things we are currently lacking a little bit beyond crypto. And last but not least, and I think this is the most imminent use case we're currently, and we have actually been working on for now 2 or 3 years, is the issuance of funds in the form of a token. So really digitization of funds in order to, again, create some value adds. That refers both to private blockchains as well as public ones. As far as regulation allows, of course, I guess that's a major element of not concern, but restriction that we face currently. But yeah, looking forward to a good panel and to dig into this element a little bit in more detail.
Thank you, Malte. So I would like to have our panelists a little bit having a dialogue rather than me asking questions and getting answers back. And also your audience, you can ask a question a little bit later and to get your answers. I would like to start with the question itself. Like when we talk about DLT and blockchain, as I've heard it about the digital euro, some of you may have witnessed, I think, we are together on a Bundestag when the European Central Bank then suddenly said, yeah, after 2 or 3 years looking into the digital euro, we actually don't need the digital euro on a blockchain. We can put it on any other IBM technology. Why using the blockchain? And then the question thread came up, okay, so we're waiting for 2 years to get this answer. Why we need the blockchain? Are you real? Yeah, we're real. And then the bigger industry, like the institutions, ask, okay, is it only for the retail CBDC or for the wholesale? And I said, we didn't really think about that, but why? And then it came up like, okay, we actually wanted to use Ethereum-based blockchain for smart contracts and then having some trigger solutions and stuff like that. So there is a need to have the blockchain. So asking in our panel, maybe looking in your direction, Frank, so do you think or do you believe that the blockchain technology and DLT is needed for asset management? When I say asset management from both perspectives, like putting the management and using the DLT for the management, and from the other perspective, having the assets being tokenized, like taking a fund which is tokenized, or maybe even taking the target asset, the alternative asset like real estate or maybe even cryptocurrency. I mean, we see now in the US Bitcoin ETFs and stuff like that. So what do you think? For what do we need the blockchain, the DLT? For everything, only for the asset management itself? And where does it make sense? Where does it give really an advantage to the industry?
Yeah, I think a wise person said, not every problem needs a blockchain or something like that, yeah? Right, but to be serious, seeing the possibilities blockchain solution offers, I think there is talking about the privatization or retailization also of private markets, and the possibility to give access to private investors to illiquid asset classes, to very complex asset classes, or asset classes like private equity infrastructure, which typically are only open for investors having a minimum investment amounts of 200,000 euro and plus. And there is definitely a need to have tokenized funds, tokenized assets that will help giving a larger community access to these asset classes. On the other hand, we have the discussions about settlement. Yeah, and I think of course, a lot of people say we have right now high frequency trading. We have smooth processes in process. We have technology that works. So why should we make it more efficient, more or better, faster? So you can always argue like this, but I think there is a clear technological shift, and as I mentioned at the beginning, that will affect the entire value chain. That's my view.
Okay, on one final point, I know what you think about it, but what do you think about the Bitcoin ETF? Do we need it in Germany?
Personally, I think not. The reason is we already have crypto funds that can broadly invest in any type of, and directly in any type of cryptocurrency or crypto assets. And as I'm coming from the fund business, I don't like a non-diversified fund.
Thanks. When you can also go to your ex-colleagues and they have a nice index product, so why do you really need it? I don't really get it, like for tax reasons or economic reasons, there's nothing behind it. But going over to the idea of having, Nisha, you said it, of having the possibility to use Ethereum-based technology with smart contracts. Is there something you're already thinking about, or do you have some projects in a pipeline, or is it like when we talk about having it like in a holistic approach to have like also the settlement on the blockchain, or in which respect do you think when you talk about having a smart contract or EVM based solution?
Yeah, I think there is a lot of potential in programmability and control that smart contracts provide, especially combined with the fact that settlement through cash happens on the same infrastructure as in the blockchain. I can talk about the proof of concept we did on the Avalanche Spruce subnet, you might be familiar with, where we basically took the first steps to actually evaluate what is the model for tokenization. How do we take a traditional asset? And we're not talking about issuing digitally native assets yet, right? Like we think that's the future state, and we think that's where there's maximum efficiency, but there is still a large portion of traditional assets which will not tap the benefits of digitization and programmability the way the infrastructure is today. So we were evaluating a model where we could take traditional funds and by using the customers, bridge them onto different blockchain networks, evaluate them on that network using smart contracts. What are the new capabilities you can track? Like simple things we tested included, like, especially the case of alternative funds, right? There are transfer restrictions in terms of the GP pre-approving who can be the, like if there's a secondary transfer, who is a new investor, whether they are on. There is restrictions on investor eligibility, all of which can be coded into the smart contract. So we tested some of this, like for example, like credentials on investor classification, on jurisdiction of investor, etc. The other interesting thing that smart contracts can enable us to do is like one institution can bring the tokens, the assets as tokens onto the network, and then you could have a totally different use case that's automated to use these assets for other value-added use cases. Like one of the things we tested with DTCC digital assets was using a very fund that was tokenized and brought onto the test network as a collateral in another smart contract for drawing more liquid money market fund tokens. So these are just like early days of exploration, but I think there's a lot of potential in programmability and the fact that you can control settlement and the transfer on the same infrastructure.
Thank you, Nisha. I think you made a nice bridge over to you, Martin. So, what is the special thing about Avalanche in respect to, or in comparison to the traditional Ethereum blockchain? So, what is special, and what is in respect to the asset management special? Maybe you can elaborate a little bit more on that.
Yeah. So I think it's important to understand that many of the benefits of the Ethereum blockchain, like the EVM, all the rich tooling around it, can be used in very, very different scenarios, not only on Ethereum, right? So I think what Citibank demonstrated here very well was how they used years of research, years of tooling, years of like technology that has been battle tested with trillions of dollars in value, and just adapted that and got a lot out of the box without, like reinventing the wheel. A very secure system, a very transparent system. I think that was a very successful showcase how we can achieve a lot with only like comparably little resources. So not like a 10-year development project or something. When it's done, the technology is already too old already to be used. But I think one thing that Avalanche does differently is that we have these different blockchain solutions that cater to specialized, which are optimized for time to finality. So we have a time to finality of around a second. So that is much, much faster, right? That enables a lot more use cases in finance. If you have a finality of even 10 minutes, that is problematic. And then like also this kind of like easy setup to quickly launch these products and with a strong partner on your side.
That's very interesting. I didn't prepare that question, but are you also using your technology, or are you offering a technology for those who are right now applying for the DLT pilot regime and trying to have a DLT TSS like trading and settlement system in place, and where they use a technology like yours to have really not just the trading but also the payment and everything in one thing? Yeah.
I'm not super familiar with the regime itself.
Yeah.
So
because the DLT pilot regime is in place from last year March, which is actually a sandbox model. So you're allowed to apply for an exemption, and then you do not need to do special duties and obligations with respect to the CSDR. But you need to at least comply with some rules. And one rule is T+2, which means that the settlement has to happen in T+2. And many have the problem that they do not really have the technology in place, or the providers who can guarantee that everything is really settled within this time frame.
Yeah, that's one of the unique things. So since we provide independent layer 2s, we don't have the complexities of settling to a layer 2 first and then to a layer 1. So settlement is very simple on Avalanche, and therefore we reach finality. So as I said, I'm not familiar with the regime, but that is something we don't struggle with.
Okay, interesting. So coming over to you, you said something which was very interesting, because for those of you who are familiar with the German law, we have with the German law on electronic securities the possibility not just to tokenize Bira bonds, but also now we can tokenize funds, really to put the fund on the chain. And you said it in the end that this is also something you're looking into, or at least want to discuss it. Can you elaborate a little bit on that? Are you doing something with UBS asset management in that respect? Are you planning to do something? Do you think it is beneficial to the industry, to the asset management industry, to have the fund on chain? So, I mean, I could have also asked you, Frank, that question. I personally have some opinion, but I would like to understand how you think about it.
Okay, let's try to be concise on that complex question, I guess, because there's a number of elements. Now, very specific, yes. We did a pilot last year, which followed a technical exploration before, but a live pilot where we did issue a fund share under Singapore law via Ethereum mainnet. So a public, so to speak, blockchain fund issuance. We didn't do this in Germany, just a matter of fact, Switzerland, Singapore, our focused markets as of now, that might well possibly also in Germany to happen. I guess the point is, and just to give a little bit also on the reflections, because obviously, I mean, we've been talking about 2030, but let's be a little bit more short-sighted. When we did this just this year, I think a couple of elements that struck us that we learned. I mean, we have to acknowledge we don't yet have digital cash, which is hindering DVP or atomic settlement. We have a lack of digital assets in a sufficient institution where we could invest into. And last but not least, there's a tons of questions that we now hit into when it comes to AML, KYC, when we want to track via public blockchains. Who are our counterparts? How do we make sure all the regulations are being adhered to? So I believe we think, obviously, public blockchains are super interesting because they create a shared standard and infrastructure that really allows us to, create efficiencies, getting away from those one-to-one relationships that we need to maintain these days. At the same time, I think we just also have to acknowledge it's a super complex element, because I talked about Singapore. At the end, what we're trying to achieve is having a product to be distributed globally, meaning across jurisdictions. And this then triggers the question about level playing field from a regulatory perspective. And it's not really helpful to have a German law, which is slightly different than a Swiss law, than a Singaporean law, and then maybe a US where you actually do not really have any legal framework that is sufficiently available. So also here to just be realistic, I think we talked about it, efficiency, access into new distribution channels, all of this is great. I think the question is really how can you and where do we find a use case where there's actually demand behind it? Because we're not doing this for ourselves, we just do it, when we believe there's either and value add for our organization, ideally for our clients, of course. And I guess that's a little bit a case where we spending some time on really finding this sweet spot, so to speak.
Thank you. So I mean, I remember back, Frank, I don't know what it was, 2 or 3 years ago, when was a UK company or some British company was saying, yeah, we can put everything on the blockchain. And then again, it turned out that the asset management was not really on the blockchain from that company. They somehow used the blockchain, but it was not on the blockchain. And then it showed really nicely that, okay, some people that just use buzzwords, and it's not really something which you can use for the technology reason, but just to use the buzzwords. But not talking about buzzwords, but talking more about the business. Duncan, so about abrdn, can you explain a little bit more some kind of your, not maybe just proof of concept, but some from projects that lately you have done for us to better understand how your approach is on the asset management and DLT right now, but also which goes to my next question, also with looking at the horizon. So how do you see the next 5 till 6 years?
Yeah, absolutely. I think the point on distribution and distribution channels is important. We've obviously seen a lot of proof of concept from different asset managers. I think now, though, we can probably agree that what's been tested is the technology, and we know the technology works. And the real proof of concept is whether there's demand and I guess figuring out where it is. And so we've tried to stick to live projects, so not just proof of concept, but bringing product to market. Last year we tokenized investments in our money market fund, so we have sterling, dollar, and euro available via our checks in the UK, and so they're on a public permissioned blockchain DLT called Hedera Hashgraph. That's a firm that Aberdeen is quite heavily involved with. And we have quite a big pipeline for other tokenized fund offerings coming up across public and private markets. What we've done today is what we call beneficial ownership tokens. So these would be like the asset-backed tokens. It's pretty straightforward to do. I think it solves for a lot of what we're trying to achieve right now. I'm not sure the market necessarily needs all native issuance today, but it allows us to bring product to market in a new form and still get some of the benefits of blockchain, such as instant transfer of ownership, 24/7, 365, airdropping things like dividends or yield as well. You get a lot of the benefits here, and I think we'll probably see more of that over the coming years as well. I do expect that a lot of our peers will have kind of move away from the proof of concept starting this year as well. I think there's been a lot of work done there. So over the next few years, up to probably 2030, we should see fund tokenization ramp up.
Okay, thank you, Duncan. So this would lead me to my final question for this panel before the audience can also raise a question. So maybe coming back to you, what would you say what is happening in the next 5 to 6 years? What do you think is other major incidents or major projects we will face? I mean, I can say from my perspective, because I'm a lawyer with regulation and deal with regulators. I really believe that if you want to understand what the business, the market is bringing in the next years, you always have to look at the regulation. To give you a small example, which is not really that much related to asset management, we have now the markets and crypto assets regulation, the MiCA, being applicable from the 30th of June for stablecoins and asset reference token, and then from the 30th of December for any other crypto assets. And I strongly believe that also the asset management industry and also the MiFID players will use that. They can do it through the so-called equivalence, and then they can get their licenses which they have in place being upgraded or being adopted to MiCA, and then they can do business under the MiCA regime. So I think there is lots of tokenization going to come. We will have a deposit token, a JP Morgan kind of some other coins which you can easily not just use for money transactions, but also for asset management transactions. So talked a lot already. So coming back to you, what do you think? What is happening in the next years? I can't say 2030. I would say the next year, or maybe the next 2 years, or maybe the next 6 years.
I wouldn't even put a number behind, let's say in the midterm, and touched some points. So I'm not going to talk about regulation. That's obviously a given. If it's not, the regulatory framework is not there, it's not going to happen. So I assume we're going to see some progress over in that regards. You also touched about digital cash. Let's also assume and hope you're going to see some progress there. I think this is really critically important. I guess one element I'd like to see also some progress, I think, which is very important in the public blockchain space, is also digital identity. I guess the question around identification of your counterparty, tracing who is, again, on chain, who is entitled to do what, would really boost also some of the main concerns that we face when we talk to regulators in our internal risk groups. So again, 5 years, and that's actually not good enough. I would also want to make this point here. we need to think about what can we do this year and next year, because I guess it's really hard to sell a project that has some assumptions 5 years out. Of course, we have, I think, this common foundational view, but the question is again, and I would be also keen to hear from the other panelists where they actually see the music playing in the nearer future, so to speak.
Yeah, what do you think, Nisha? Where do you see the business or the level playing in the next months, years, 2030?
I think it's going to come down to getting projects working. And I agree with Duncan. It's not about the technology. It's about getting the folks, like somebody to buy what the asset managers are willing to tokenize and bring on stream. So for me, it seems more like a distribution critical mass problem. Like we all agree that for this to work, for the flywheel effect of something like a two-sided marketplace to take off, you need to hit a critical mass. And it seems like the missing point, the missing angle here is enough demand. And that's where you're going back to, like, no one's asking for tokenized assets today, like they shouldn't care. Like you don't really care which cloud server or which mainframe your assets are sitting on. And eventually, like for us to get projects to a stage within the next 2-3 years where we actually start doing more and more tokenized issuance, like the blockchain itself should become less important, and it should be more like, okay, what net new things are you able to do today, which is made possible by technology? So it's a very hard problem to solve from that angle. And my personal perspective is, I think at some level you should abstract away the fact that there is a blockchain. It's very hard to do when the investor needs to, like, or the investor's custodian needs to have like managed private keys and wallet access. But at some level, like if you abstract that away and say, okay, you're going to access it the same way you access your traditional private equity funds today, like for private assets especially, which is where we agree there's the biggest delta in terms of potential value add. But you're able to do new things, like maybe you can transfer it easier. Maybe it's easier to fractionalize. Maybe it's easier to move it between jurisdictions. Like enabling those capabilities without exposing the complexities of the technology to investors, I think that's probably what's going to push to critical mass in adoption.